Hello traders, Gary Wagner here, just about 12:15 in Honolulu, 5:15 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is January 10th, 2020, and this is the daily report for gold and silver, our weekend review. And this was an incredibly volatile week. Within a 2-day period between Wednesday and Thursday, we saw gold hit a high of $1,613 an ounce to go down the following day, meaning yesterday, to $1,541. Today, we did see gold trade higher. This in response to slightly weaker than estimated numbers on the U.S. Labor Department's jobs report. Anticipated jobs added last month was 160,000. The actual number was 145,000. But next week is really even more important than the jobs report. And that's rare because that's typically one of the most important data sets we see during a month. But on Wednesday, the 15th, we should have the signing of a Phase 1 trade agreement between China and the United States. And on today's show, we'll talk about how that could affect the markets next week. But first, let's take a look at closing prices on our price board. The precious metals did close higher across the board, with gold actually having the least percentage gain on the day, oddly enough, but still a moderate upside move in gold, $1563.20, almost $9, almost 0.6% in terms of the gains. Next to silver, that gained a little bit over a full percentage point, up 20 cents at $18.13. Palladium gaining $13.20 in trading today. Still another new record high close at $2,073.60. And in terms of percentage gains, platinum led the way today, up 1.22%, $983.90. We did exit our long February gold earlier this week, and we did pull a profit. We'll talk about that as we pull up our technical studies. An extremely volatile week, as we spoke about in our opening letter and opening statement. We can see the candles that compose this week. They really began on Friday in terms of the big move. That is when the U.S. conducted a drone missile strike against the Major General of Iraq. That caused gold to move up in double digits, trading to a high above 1550, but closing just above 1551, and that is this candle here. Of course, because of the action that occurred, we saw the market gap, and that's a fairly rare occurrence these days because the only time you can see a gap whatsoever in gold is as it closes up in New York on Friday and then reopens on Monday in Australia. That's about a day and a half here in Hawaii. But we saw the market trade aggressively higher as the market opened up. This came in, of course, this is Monday. We get that gap. We get this extreme high above 1580. So all throughout the first couple of trading days of this week, we were trading above last year's high. Then we had the extreme volatile day, and that was the day that the missiles were launched by Iraq. We can certainly see that as it played out because we can see this tremendous spike to the upside in terms of gold pricing. That would be this candle right here, and then close lower as cooler heads prevailed, and the sense was that there would be no retaliation by the United States. That, of course, would have been on Wednesday. And then on Thursday, following a statement by President Trump that said there would be no retaliatory moves against Iran, and Iran's statement the day prior to that, stating that they had concluded their retaliation or retaliatory strike for Friday's action. We saw the market trade to these lows just above 1540 and actually close at 1541. Now, we did move our stops up. We moved our stops up to 1573, and that is where we got out. That's the good news. We also got in at 1507. That was on the first position right about here. However, I did suggest that we add to that position, and this was as I was watching missiles being fired into air bases in Iraq, and I thought that there would definitely be a retaliation by the United States. That's what moved the market up higher. Of course, once the news came out, the dust settled, and there were no casualties either by Iraq or U.S. soldiers, most analysts believe that that would be a one-and-done type scenario by the United States on Friday, and then the retaliatory strike that the Iranians had this week. And so we saw the market move up. Today, the jobs report came in mildly under expectations, but not by that much. Nonetheless, we saw a strong move, about a $10 move to the upside in gold. And what is most interesting is that it did close right in the territory of the record highs last year. This just being the second week of this new decade, this new year. And if we take a look at the highs that came in, of course, we can see that we closed right about there, just shy of the high that was achieved, but definitely above the closing price last year, which was the highest close that we saw in gold. And that, of course, occurred in September of 2019. Next week also promises to be a most interesting week in that on Wednesday, the 15th, there should be a Phase 1 agreement signing between China and the United States. And how the market will react to the signing, I think, is highly dependent on what the agreement actually says. And obviously, if there is a signing, we should get some information as to what is included in this Phase 1, this first part of a comprehensive trade agreement. And based upon what is actually accomplished, we could see the market in terms of gold and precious metals come down hard if we believe that there has been some real ground achieved in terms of coming closer to a resolution of the trade war. However, if it is a series of empty promises or very, very lightly worded, we could see gold move the other way. Then, of course, over the next couple of months, we will be watching to see if the Chinese government not only has signed the agreement, but now following the agreement itself and not breaking any of the points. So there's a lot of contingencies there. We'll talk about that on Monday. But most importantly, we did get out of our trade this week with a profit. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.